In today's episode, I'm going to teach a crash course on how to read the meaning behind individual candlestick patterns that create the candlestick charts that I use in my trading every single day. This is going to be the Cliff Notes version of my full-length classes that you can watch here on YouTube. So let's go ahead and dive right in. All right, so we're going to talk about the anatomy behind an individual candlestick. Candlestick charts were created in the 1700s in Japan, and they are one of today the most popular types of charts. This is a very simple candle. And as you can see on a typical chart, we see hundreds of these, if not thousands of candles when we look at a chart, especially when we zoom out, we pull the chart out, we look at the big picture. So all of these charts are created by these individual candlesticks. And an individual candlestick is created based on 4 pieces of information: the open, the close, the high, and the low of this session. Now, the phrase session refers to the period of time for the chart that you're looking at. So if, for example, we're looking at a 5-minute chart, as we are here on the S&P 500, each one of these candles represents 5 minutes of time. It's a 5-minute session. All right. Now, if we're looking at we switch back and we change to a daily chart, then each candle represents a full day of time. So if we look at the chart here, we look at the whiteboard, the way this candle is created at the time that the session begins. Well, so let's just say it's 9:30. That's the beginning of the time. If this is a daily candle, this is the open price down here. And during the period of the day, the price goes up, maybe it goes down, it goes back up, it goes down, but we know that it closes right here. So then when we look back at the historical chart, we see this large green candle. Now in this case, the open also happens to be the low. It opened and it never went lower, it just went straight up and it closed at the high. This candle communicates sentiment. And what kind of sentiment do you think communicates? A high degree of strength, because the price opened, it never looked back, and it closed at the very top. Now, it's true that if we looked inside this candle, if this is a daily candle, then we could zoom in and we could break it into each one of its 5-minute candles, for instance. And there we would mostly see a little bit more price action. We would see the price moved up, and then it pulled back, and then it moved up. But nonetheless, at the biggest picture, the highest level, this candle communicates a very high level of sentiment. So now let's start tracking the candles that you're learning about right now. This is called a long-bodied candle. So long, I'll write this in black. So this is a long-bodied candle. And it's called that because it has, as you can see, a long body. Now, this would be a short-bodied candle. So it has a short body. It's a very small candle. Now, this communicates naturally less bullish sentiment than its long body counterpart. This shows a little bit of, yes, the price has moved up, but not to the same extent. Now, let me show you a different candle. This one's an interesting one. This is called a spinning top. Okay, so a spinning top here is created based on the price opening right here at the low, the price declining all the way down, then coming all the way back up, and then closing down here. So what does this candle shape communicate? This communicates indecision. We have this big lower candle wick and this big upper candle wick. So in keeping with calling these candles, we call these lines candle wicks. So I'll just draw this over just to make it clean. So this is the body of the candle. And then these are the candle wicks. This is the upper wick, and this is the lower wick. Now let me show you another candle. That is a doji. A doji candle opens and closes at basically the same price. D-O-J-I, doji. Now, this would be a long-legged doji right here when it's really long and stretched out. So long-legged doji. and this is more of your standard doji. A standard doji looks a bit more like a cross. It's a little bit smaller like that. Again, these candles communicate indecision. All three of these communicate indecision. So when we're looking at a chart, I look at these candles because they help me read the sentiment in the market. When I see these very large red long body candles like what we have right here, this communicates obviously weakness, and this communicates weakness, and this results in multiple days of the price declining. When we have small little topping tail candles, we sometimes will call these upper candle wicks topping tails, and we'll call these bottoming tails. A topping tail is bearish. It's bearish because, and bearish means weak, because the price moved higher, but then sellers pushed it back down. A lower tail is bullish because although the price did drop, it got bought back up. So when we see a series of bottoming tails, these communicate that there are buyers stepping up. When we see a series of topping tails, these communicate that sellers are coming in. Now, a few additional candles here. Let's see. This is called a dragonfly doji, and this is called a gravestone doji. So we've got the dragonfly here, dragonfly doji, and we've got the gravestone doji. This could get a little messy here, gravestone doji. Now, both of these, again, communicate indecision. What you now know about the upper and lower candle wicks and their meaning, this is more bullish because although the price declined, it came back up. This is more bearish because the price came up and got pushed all the way down, which is why it has the ominous name of gravestone doji. All right, so we've got gravestone dojis, we've got dragonfly dojis, and now let's draw another candle here. This candle here, when it occurs at the top of a move up, is called a hanging man. Hanging man candle. So when we have the price move up over a series of green candles, so the price goes higher and higher and higher, this is going to be trending price action. Now, the times that we pay most attention to the shape of the candles is during these types of periods. These could be long body candles, nice big green candles, and then up here, sentiment is very, very strong. And so if at the very top, all of a sudden we see this type of candle, this is considered an indicator for a possible reversal because seeing indecision after having this very strong sentiment means the tide may be shifting. The confirmation will be if the next candle goes red and starts to decline. So this is a candle that is an indicator for a possible reversal. Confirmation is when the next candle makes a new low. If the next candle doesn't make a new low, you don't have confirmation. Without confirmation, we don't take a trade. So this would be a doji at the top. If we had a hanging man at the top, especially if it was red like this is a very high likelihood of a reversal. It's beginning to show the weakness is coming in. Certainly, if we had a gravestone doji at the top, that is a high likelihood of a reversal already beginning because it shows the price came up, got pushed back down, and this is what normally happens on the next candle. You see this reversal back down. So once you build your own pattern recognition of seeing this shape and recognizing what it means, you're in the process of learning the language of the markets. This is all about pattern recognition. Just like learning a language of the alphabet, you learn the sound of the letter, and then of course you learn to recognize it. Here we have it's not about the sound, but it's about the meaning behind the shape, more of a hieroglyphics type of a situation here. So the dragonfly doji, the gravestone doji, the hanging man right here. Now let me show you another one. So in terms of context, this is called a hanging man when it occurs at the top of a move to the upside. So when you have this move up here, that's called a hanging man. But here's something interesting. When you have a move down like this, and then you have this, it's not called a hanging man down here. This is still a candle that indicates a possible reversal. So at the top of a move up, it's a hanging man for a reversal back down. When it occurs at the bottom of a trend, it's called a hammer because it's hammering out the base. See here, in this case, it's interpreted that we had significant sentiment to the downside, and then all of a sudden the trend shifts right here and buyers come in and step it up. So if we kind of imagine this mallet here hammering out the base, hammer, 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 this becomes our new level of support. What we have found is that off this price, we have buyers who are stepping in. There's demand down here. There's demand and there's support. And we like to buy off of these levels. So whenever I'm watching a stock, the areas that I'm most interested in are after we've had a series of big green candles, because I'm looking for these types of reversal candles, a reversal indicator. Now, a reversal indicator could just be a short-term reversal, like to right here, for instance, and then right at that spot, we could see a bottoming tail, a small hammer, and then we're looking for a move back up. And this is more of a short-term correction that then gives us the next leg up. Long body candle, long body candle, long body candle. And then up here we see a gravestone doji and we get out. We let it pull back down, right? It starts to pull back down again. And then maybe down here we see that dragonfly doji, and then we take the long coming back up. So what you'll learn to recognize is that the places to pay attention to are at the top of trends and during pullbacks to see whether or not we're getting an indicator that the price is about to shift. So we really sort of pinball between these levels. We see this little reversal, this little reversal, this little reversal, this little reversal. And as active traders, we want to buy off of support, and then take profit into resistance. So I would say, and these candles, they can, of course, be either green or red. But long body candles, small body candles, or short body candles, spinning tops, dojis, all candles of possible indecision. Hanging man right here, or alternatively, it can be a hammer when it occurs at the bottom of a sell-off. So this is during an uptrend, and then this is during a downtrend. And then we have another candle right here, which is called a shooting star. I don't need to fill it in. So this is called a shooting star. And this is a candle that occurs also in the context of a move to the upside. So we have the move to the upside. Instead of having the hanging man candle there, we have this candle. Like a gravestone doji, the candle's already started to pull back and is red. It's a shooting star. So we call it a shooting star because the price comes back down, just like a shooting star comes back down. So if this had the body here, that's a shooting star. All right, so again, a shooting star, just like this. Now, when we have a sell-off, when the price is selling off like this, and then we have a shooting star down here, it doesn't have a different name. Doesn't have a positive name in the case of like a reversal back up. Unfortunately, in this case, because you have that upper shadow, and that upper shadow communicates weakness, it's just a continued weak candle in a period of weakness. So it doesn't have an inverted kind of relationship with moves back up. So I would say that learning about the shooting star, the hammers, the hanging mans, the dojis, the spinning top, and the long body and short body candles will give you a good starting point. This is like learning your vowels. These are like the most sort of important individual candlesticks that make up any chart. So when you look at a chart like this, you'll start to be able to recognize, oh, here we go. There's a little gravestone doji right there. There's a little kind of little bottoming tail dragonfly doji right here. There's a little doji right there. There's a spinning top right there. There's another little kind of almost a hammer, but a little bit of a doji down there. Now, the S&P 500 has a lot of doji candles, and that's partly because ETFs become very thickly traded, and there's such a battle going on between buyers and sellers that there's some indecision there. If you start to look at individual stocks that are showing strength, that's usually when you'll start to see cleaner patterns on both your 1 minute but also your 5 minute chart. So like this particular chart here is for a stock that gave us a pretty nice move just last week. So I'll back this up here. So right in this area, for instance. So here we get a nice move up with a long body candle, a pullback with a small doji. Remember those bottoming tails? They're bullish. The The price drops, but it gets bought back up. It squeezes higher to a new high. A little topping tail, which is bearish. We pull back on a small red candle. Now we've got a doji indicating possible buying off the low. We surge back up here to a new high, right? So a couple nice little patterns there on this one. Back in this area, we had a nice little stair-stepping pattern, which is stair-stepping is when the price kind of moves up, goes sideways, moves up, goes sideways, moves up, goes sideways, moves up, goes sideways. So you start to find that in these areas, it becomes even more important to get dialed in, looking for those bottoming tails, watching those topping tails, looking for long body candles, and trying to see when and where is the price going to reverse. You've got that nice little hammer down there off the low. So the more experience you gain, the better you will get at recognizing these patterns and picking up on the message they are communicating. Because in these candlestick charts, there are buy and sell signals. If you're not seeing them, it's just because your eye is not yet trained to pick up on it. You're still in the process of learning the language. Now, if you want to watch some of my episodes that are full length, deep dive into learning how to read candlestick charts, make sure you check those out. They're right here on YouTube, and I look forward to seeing you for the next episode. Hope you hit that subscribe button if you found this helpful. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you here for the next episode real soon.